So, good evening, everyone. A very warm welcome once again. Today's topic of discussion would be India's asset in macro backdrop. So, today we have with us Professor Varun Sharma. More introduction of Varun, I think Sandeep Pai will help me with that. And we also got Deepak and Sandeep and even a few more regular speakers, Rahul and Naveen might join the discussion, but primarily Varun would be sharing his thoughts around the topic. And so, Sandeep, over to you, and I'll come again with the questions once you are done introducing Varun. Yeah, please. Thanks.
Since, a quick introduction or a backdrop for this session. So, I've been nudging Varun for quite some time now to come on some of these Twitter spaces. He's a reluctant public speaker. He's obviously an academic speaker, goes into various industry academic conferences all the time, but probably this is his first time. So, thanks, Varun, for agreeing. Just to give a bit of background, so Varun, Deepak, and I, we studied together back in 2005 in IT Delhi during our MBA days, and then Varun joined corporate world in various organizations, including domain consulting assignment with PwC in banking. That's when he shifted to UK. He completed his master in finance from London Business School. Subsequently, he completed his PhD. Then he joined Singapore Nanyang University as assistant prof, and then right now he's a assistant prof in Kelly Business School, which is again top 10 Ivy League style of a university in USA. So, I mean, as a friend or someone who knows Varun, it's quite a bit of prestige for us to know him. And I'll just post his profile a bit here in the chat just for others to see some of the research work he has done. So quite an interesting work he's doing, and every research paper, while may sound very academic, that is what it is supposed to be when you are doing tier one style of academic research. Today's agenda will be much more freewheeling chat, and the purpose of this session where we requested a topic which can be of interest to the typical audience prince you or your platform gets. So nowadays we get a lot of requests from global Indians, which are, let's say, Indian residents, RNRIs or OCIs, who wants to explore Indian markets, especially stock market as an asset class. I mean, everyone understands, but then there are pains attached to it, structural, etc. And there were reasons why those NRIs were typically more interested into Indian real estate versus Indian stock market. But that shift is changing in last 3-4 years, and a lot of people who follow such fund flow closely will probably recognize to that. So that's the broad contour of the session, but I'll give it back to Prince. And thanks, Deepak, also for joining this session. And I can see Nikhil and Deepak Chokhani ji also. So if both of them want to come up as a speaker and during the course of discussion, if they can add value, that will be quite helpful. But back to you, Prince, to moderate the session, go through
Great.
the flow.
Great. Yeah, great. Thanks, Sandeep. And I sent requests to Rahul, Nikhil, and Deepak so that they can subsequently join and add value to the session. So, Varun, to kickstart the session, I would request you to where does India stand as on date compared to the other emerging markets globally?
Uh, Thanks, Prince. First of all, let me thank you for inviting me, and thanks a lot for Sandeep for such a remarkable and praiseworthy introduction. I hope I live up to your expectations. So, in terms of where does India stand as of date compared to other emerging markets? So, it's no secret. Everybody knows that India is one of the fastest growing economies in the world. It's rather the fastest large economies in the world. Uh, Before we go into where does it stand today, let's take a step back and see where does this emerging market uh, started from. Like we had this concept of BRICS uh, 20, 25 years back. It all started with India becoming the ITES hub of the world. The time when India was becoming an back office of the whole world, China was becoming a manufacturing hub. Now, both of them emerged the way they emerged because of their competitive advantage. China had a competitive advantage in terms of infrastructure. Both of them had a great workforce. Demographics were on their side. India lacked the infrastructure, but had a huge talent pool and an English speaking population. So, with that competitive advantage of India and China on their side, they started and they grew to whatever, to where they are today. But now things have started to change. The demographics is on our side, where China, because of their one child policy, the population is aging, the labor cost has increased there, and on our India, the demographics still on India's side. It's still India's decade. We have a large young working population. On infrastructure side, we have seen a lot of investments. We have seen a stable government. So as a result, things have started to move comparatively. India is not that disadvantaged in terms of manufacturing now compared to what it used to be. Uh, there has been a heavy investments in by government in renewables, which will help us move away from our reliance on oil, which will help us keep the current account deficit in check. And with all that, I I don't see any reason why in next India's big breakthrough would be in manufacturing. We may not able to be China level of manufacturing, but we I see India as becoming a good hub for manufacturing and specialized service, specialized products. There is a lot of push on semiconductors, a lot of push on renewables. So that manufacturing push, if it takes up, and we have seen some success already with the Apple moving its manufacturing base in India in collaboration. So if manufacturing takes up, that will be a next big shot in the arm for Indian economy. And we also see these things are reflected in the stock market valuation, which in turns get reflected in the importance of Indian stock market in global indexes. So, for example, MSCI Global Index, which tracks emerging market stocks, uh, recently the weights of India has increased to 19% from 18%, whereas the weights on China in the index have gone down from 25 and a half to probably 25. And no wonder there is no, like, I would be not surprised at all if we surpasses the 20% weights in the index in the second half of 2024. So India as an within the emerging market is increasing. We are getting a lot of traction. At the same time, if you compare with other BRICS countries, Russia, South Africa had their own problems. Brazil had its own problems with the political stability and other issues. So among emerging markets, I see India as a dominant player, and these as weights increases, more and more funds will flow into India, and which will further increase the stock valuation, which will further increase the weight. So I see it's in a very commanding position to cut it short.
So, Prince, if I may add, so glad that you brought that point, Varun. So, when we talk about India's weight at 19%, we should see it from the context that hardly 5, 6 years back, this number used to be 12, 13%.
13%.
And most often, active fund managers who are typically pro positive India, they carry like +2, +3% kind of a weight also on top of the index. So these index are more used for benchmarks, and then any active scheme on top of it. As a fund manager, you have luxury to go +3%, +4%, sometimes as aggressive as +7%. And what is interesting, Varun, as you highlighted, is that while China is at 25% and India at 19%, we should also see it as a compare with in comparison to our GDP. So China is what, like 15 trillion kind of a number. We are 3, 4 trillion. So we are one fourth the size and we are almost 80% of the weight. And that is again for known reasons, that while for good 2 decades, global fund managers have been in awe of the execution in China, what many people, even at an institutional level or fund manager level, has failed to understand that stock market is more than just the so-called performance. So as long as you don't have the confidence on the legal system, as long as you don't have the confidence on the um, you know the rights of minority shareholders, etc., your valuations will always be suppressed. So last 20 to 20 odd years, China always grew at least couple of percentage more than India, but still the China never attracted a index level valuation of more than 12-13%. Use any metrics, you'll be amazed at how undervalued Chinese stocks are. And those will probably remain that way also, in spite of, massive fund flows there, passive fund flows, global fund flow, which is there in China. And India, in spite of all the problems, being once in a while coming as a fragile five, very broken kind of a democracy where everything is debated but hardly executed kind of an environment, India is always, along with South Korea, is the most costliest emerging market. So a new fund manager always struggles, like, why should I buy India at such a high cost? But that's the whole quality or perception kind of a challenge, that you'll never find India cheap, right? So you can, it will always trade at 20 to 25. So that's what I wanted to add, but I'll give back agenda to Prince to drive through the other parts we want to cover.
Thanks, Sandeep. So, talking about like the INR in comparison to the other forex in recent years, and we can draw a parallel like how it had been historically and going forward, where we can see it going forward.
Uh, and that's a wonderful point, Prince. Uh, let's understand the role of INR when, especially when it comes to uh, NRIs investing in India. Uh, if an Indian invests in Indian stock market, you get the returns. You get the returns. Let's say a stock went from 100 to 110, you make 10%. Fair enough. But if you are an NRI, and let's take an example, if you're sitting in London, uh, if the GBP to INR, for 1 GBP, the INR was 100 rupees. In that same process, the firm went up from 100 to 110, but their conversion went from 1 GBP from 100 to, let's say, 110 again. Then for somebody, an NRI sitting in London, the stock return is zero. So because currency depreciated. So whenever we look at and from an NRI's perspective, Indian stock market, we have to understand the role of the currency depreciation. Now, on that note, things have been improving quite a bit. So, in let's take an example. In last 1 year, INR has been stable across all major currencies, across USD, GBP, Euro. It has been very stable. There has been no depreciation. If you go further back in history, let's say last 10 years, you would see that INR depreciated around 3.5% to 3% annually compared to USD. Uh, in terms of uh, Euro and GBP, INR depreciated around 1% annually on an average. Because in this period, both Brexit happened in UK, and we had a sovereign debt crisis in Europe. So the currency has been performing well compared to USD. So this is the general 3.5% decline which has been happening in currency over the last 10 years. Now, why does it suddenly from 3.5% annually on an average? We are looking at a very stable currency with no depreciation, and the reason behind this is the inflation dynamics. So, just to give you an example, and cut me short if I am going in too much detail, and because about how does what's the role of how does the currency why does currency devalues, why does INR devalues? And the reason is inflation. The target for RBI for inflation is around 4%. So RBI wants to maintain an inflation of 4%. uh, Whereas all major currencies, economies in the world maintains a target of 2%. So Fed has a target of around 2%. Now, in last 10 years or 5 6 years ballpark, uh, the average inflation has been in India of around 4.5%, and the same number has been around 1% in US. So the difference between Indian inflation and the US inflation of 3.5% gets reflected into depreciation of the currency. Uh, the If the inflation is higher, the currency will depreciate. The logic and underlying logic is that no matter which currency, they should able to buy the same thing uh, at the same amount. So, for example, like there is a McDonald's burger index, which measures the cost of one burger in US, in USD, in GBP, in Euro, or in rupees. So, if one burger cost 100 rupees in India and it cost 1 GBP in London, then the conversion between GBP to India should be 1 to 100. So now if after 1 year, the cost of burger increases to 110 in India because of inflation and stays as 1 GBP in UK, then the currency will depreciate to 10% depreciation. Now, so this is the role of inflation in determining the currency conversion and depreciation. Now, post COVID, the inflation has been very much controlled in India compared to uh, US and other major currencies. And as a result, we have seen the inflation in India not much higher than the inflation in US. Rather, in some points, the inflation in US was higher. And as a result, we have seen no depreciation in Indian currency. Also, there is a role of real interest rate. I won't go into detail of that, but there are hints that maybe the real interest rates are higher in India now with contained inflation compared to US. And as a result, we are talking about even INR appreciating, which is not something which you would against USD, which you not see very often. So if INR starts appreciating, which a lot of people have been saying that in compared to in terms of purchasing power parity, INR is much more depreciated and it should appreciate further. So if INR starts appreciating, the returns that you are getting on Indian stock market will further increase instead of going down. Earlier, it used to be like if you make 10% in Indian stock market and your currency is devaluing by 3.5%, 3%, you're only making 7%. But now, if INR starts appreciating by 2% and you're making 10% in the stock market, then it will become 12%. I'm just taking an example. So, from a FX perspective, India seems to be very attractive a market right now. Plus, the volatility in FX is very, very low. The hedging cost is much better compared to earlier periods, being the INR being in a very stable zone right now for the last 1.5 years.
So Varun, glad that you brought that point, and I think Deepak has solid, handling of international corporate clients and their exposures, and he understands the cost of capital, especially on the debt side, and the FX hedging element quite well. So Deepak, if you want to add anything, because I mean, I understand a lot of these things from market perspective, less from business perspective. But when these exporters, importers deal, I mean, there is always this element of FX hedging cost. And if FX is much less volatile than a typical emerging market currency, the hedging cost comes down. I mean, the expected depreciation is low, plus even because volatility is low, your options value or any of those hedging instruments also becomes much cheaper. And in fact, many times people can even let it be partially hedged or even unhedged, the aggressive businesses, etc. So Deepak, over to you. Anything you want to add here on the FX element and how it helps make India less of an emerging market, more of an, aspiring G10 style of a market, even though on many metrics, especially things like per capita income, we are still like, third world country or, struggling emerging market. But on some of these aspects, on macro indicators, we are becoming probably as attractive as, let's say, G8, G10 kind of a thing. So Deepak, over to you.
Yeah, sure. Thank you, Sandeep. Hi, good evening, everyone. So, a couple of points. I think while Varun has, I think, covered largely the main impact that we people see as investors. मतलब अपने को stock market में जो difference आता है अगर कुछ कोई dollar investor है versus rupee investor. So I think that is well covered by Varun. But I think picking up from where you left, Sandeep, in terms of how the the currency is behaving or how do we become a more stable currency and all those things, I think for that we have to see that rupee is still not fully convertible per se. When I say this not fully convertible, मतलब current account पे rupee is fully convertible. Current account से मतलब है exports, imports and other things. We can make payments for goods or services. There is no restriction. On capital account, when we bring money here for assets or we send the money out from India, there is a level of restriction that makes it partially convertible. Just saying it in a simple manner with respect to all our audience, we can always probably do a deep session and get some FX experts as well if people are more interested to explore this further. But motamoti at a broad level, rupee abhi fully convertible nahi hai, but lot of things are happening which are very encouraging, both on the government side as well as the market side. I think, I'm sure हम सब लोग देख रहे होंगे कि अभी recently rupee जो Indian banks हैं, उनके overseas branches को RBI has allowed that they can start lending rupees to NRIs. So basically, so that NRIs can now also, and they can open rupee accounts also with the overseas branches basically. So उससे क्या होगा कि जो NRIs हैं, they can convert their dollars in say America and keep that money with say a branch of ICICI Bank in New York in rupees, and they can also borrow in rupees if they want. So basically, the trade in rupee is increasing. These are all small steps that we are taking to become a major force in the global economic world, and eventually then maybe have the ability, or and the depth and the width also, in terms of our currency, availability and presence and everything, so that tomorrow then we can have far more sources and eventually full convertibility की तरफ हम जा सकते हैं. जैसे डॉलर आज की रेट में you can, डॉलर is almost fully convertible. So rupee को वहां जाने में थोड़ा टाइम लगेगा, right? No doubt, but I think that's an interesting play, and we are taking steps towards that. So hopefully we'll see
Yeah.
it in our lifetime. So
Thanks, Deepak. Actually, you brought a wonderful point. If you saw the overnight note which was circulated, I tweeted also. I mean, in multiple forums, we saw Jim Rogers, known India critic and known, China bull, talking about India becoming slowly the wow country. One thing he still keeps on demanding is that I should be able to invest in India the way I can invest in, let's say, Australia or anywhere else in the world, and that's the full convertibility. I don't think Indian regulators will be in hurry to do that, but that's a challenge which still remains for institutional investors, and they have to register and they have to do all those things. So investments in markets is still not like seamless for them, like plugging in, plugging out kind of a thing. But for NRIs, etc., probably the levers are much more smoother now. I mean, there is still a lot of governance and operational hassles, but I think as long as you're not a big investor, things are becoming much easier. So will Deepak will probably try to cover that particular aspect, and will surely take your inputs on LRS etc. And we often talk about, right, that for NRIs the biggest challenge is, let's say, even if they put in a couple of $1 million, 3 million, $4 million, and put in here, and then suddenly one fine day they decide for various reasons they want to pull it back. It's not easy because of the capital controls, right? So we'll come to that. But Deepak, quickly on this also, the fact that and maybe first we'll request Varun to speak on that, because Varun is a solid debt investor also, right? So Varun, the difference between US yield and India yield, which is historically always like 3-4%, last 2 years, and let's not even pretend that these 2 years are permanent, but trend is surely shrinking. And you earlier talked about inflation. Inflation is obviously the most popular interest rate parity kind of an explanation, but there is also this balance of payment style of an explanation to what is happening, the trade flows and those sort of things. So US yield is right now roughly at 5%, 4% at 10 year, and India is what, 6.5, 7 kind of a thing. So this is the lowest we might have seen in our lifetime, and that's probably very encouraging to a lot of big businesses to invest in India, because your cost of funds are much more stable, etc. So anything to talk on that, Varun, and then maybe Deepak?
Yeah, Sandeep. So that's what I hinted in my when I was talking earlier, that the yields in India has been low, largely driven by lower inflation. Also, there is lot of stability. There is a lot of in the government. Recently, S&P highlighted that they have put India on a positive outlook. So we might see some sovereign ratings being upgraded, which will further reduce this. So India is generally saves a lot. India as a country saves a lot. So there is no dearth of capital for firms to come and uh, invest in India, or and I don't. There is a secular decline all over the world in terms of government, in terms of interest rates. They have been going down, but I see them going down much faster in India compared to some other countries. So yeah, you are very right that that lower yields will definitely help drive the S&P ratings and sovereign ratings upgrades, uh, control fiscal deficit. Uh, Another big advantage is current account deficit. We have been this double problem of fiscal deficit and current account deficit, that when oil prices goes up, our inflation goes up, which further reduces, which further depreciates the currency, which further increases the oil price. So we have this negative spiral. But now with focus on renewables, that issue would be lot less problematic moving forward, because we will be needing across the world, but also in India, we would be needing lot less oil and relying lot more on on renewable electricity generated from solar or wind, let's say. So these factors will definitely keep helping India in the long run.
Thanks, Varun. Deepak, over to you for anything to add on this.
No, I think this is a fantastic thought. I think Varun highlighted very well, about the renewable theme, and we have all been discussing. I think as an investment group, also we have all been discussing a lot about it. This is just the other aspect of it. So fantastic. Not a specific thing to add here. Happy to hear others' opinion.
Sure. Rahul, Nikhil, or anyone else also, please feel free to, ask question, add to the discussion. It's a free willing chat, and it will be probably very short also. So I'm adding some of the data points also in the chat, to add to the discussion which Varun is highlighting. So Varun, probably we can move to the
Uh, uh,
next part. Sorry. So yeah, Rahul, please.
yeah. Hi, Varun. It's a pleasure to listen to you. I just wanted to understand if you can just highlight on the bond index inclusion of India, and when are we going to see that substantial impact in field, right? When do you expect that exactly?
Sorry, can you further elaborate on that? You mean bond index inclusion, as in?
So Varun, this he's referring to the recent inclusion in JP Morgan bond index, and I think we are likely to come on to the FTSE also. So these bond indices, because of lack of full convertibility, always avoided inclusion of Indian bonds. And they were pressurizing, I mean, government of India was pushing, and then obviously these indices were saying that you change it, and government was saying that we won't go fully convertible. But there is huge demand of Indian bonds in the bond market, because you're getting 6-7% kind of a yield, very low FX hedging cost. So anybody who's trading high yield, sovereign bonds as a bond manager, he doesn't want to miss that yield just because it is not part of indices. So it was huge pressure from investors, as well as lot of push from government of India. So first inclusion announcement has happened, and that will slowly come up. I think if I'm not wrong, I need to dig deeper, but probably 30-40 billion dollar kind of money will come into Indian bonds, like a secular flow, and then other bond indices will be forced to copy that, right? So that's what probably Rahul was referring. But I think, Rahul, I might have answered to you. In next 6 months, we are expecting first tranche from first indices, but other two will also follow suits. I mean, you can't afford to not have India in bond indices. So that's our way. Like, we Indians always have our way, right? We argue we don't adopt, but we force people to finally adopt us to our standards. So Indian regulators have been very, I'll say, back in mid 90s, Rahul, going back a little bit, this entire East Asian crisis. So some of the smaller countries blindly adopted whatever IMF and international economists were suggesting them. India was only country, because regulators were very sharp intellectually, right? We didn't succumb to that pressure. So we are only among the major EMs which is still not fully convertible. We said we will keep it partial convertible, which Deepak earlier mentioned, that your capital in and out will not be, completely at your will. You cannot just come here for 4% 1 year and then suddenly leave in Exodus because you find South Korea as an attractiveness and compared to India. India as a country cannot afford that kind of a debt fund flow, because it brings more stability than any benefit in short run. So you want more stable flow, and that's the thought process of regulators, and that's why they want a controlled kind of a, more sustainable kind of a flow, rather than hot money getting in and getting out. India markets are still not so deep that it can handle that kind of money. Does that answer your question, Rahul? Okay. I hope it does, Rahul. So, Varun, maybe we can probably touch upon the another aspect. I mean, when we talk about NRIs or OCIs, or even like we're not probably discussing this from international fund managers' perspective, more from individuals' perspective. they have a lot of options, right? So someone sitting in Australia and Germany, etc., they have local markets, they have local currency, FD style of options, bonds, etc., compared to what they can get in India, but it brings a lot of hassles. So maybe something from your academic standpoint, even your personal experience, or I'm sure like a lot of people reach out to you for some of these advices also. So how do you evaluate Indian markets attractiveness versus the challenges uh, when it comes to global asset allocation options for NRIs or OCIs?
Uh, so Sandeep, there is always an easy but relatively expensive option of going to a UA, going investing in emerging market through an MSCI emerging market fund. That gives you a lot of diversification. Uh, but it comes with a cost. Usually the cost charged by these funds are higher. We have seen a lot of ETFs being launched, uh, which focuses on specifically on India. We were talking earlier about this Franklin FTSE India ETF, Invesco India ETF. So there are these ETFs which can be used, but the cost can be uh, higher, and but they're easy. You don't have to do anything. Now, the second option is going directly and investing in India, which is through by directly going and investing in Indian stock market. And there you again have options like going through a mutual fund or ETF or directly investing. So as an instrument, these are a few ways in which individuals sitting in outside India can take exposure to Indian markets. Does that answer your question, or you were looking for something else?
No, no, yeah, yes, for sure, Varun. So thanks you brought up those points. Let me probably add some of those lists in the chat just for, more as a reference. So I agree. I mean, whenever people reach out to me, I always try to explain it to them that you need not to go through a lot of these hassles. You can still take some India exposure being in US, etc. There are a lot of ETFs, but as you rightly pointed out, these are not completely passive index based ETFs. These are kind of partial active ETFs. So the fund management cost is roughly 0.75%, 1% kind of in dollar, which is quite a bit of a charge because on USD terms, India will still give you 7-8% rate adjusted for FX. So you pay maybe 10-15% of that performance in the fund fees, but you're still having a dollar assets, and at will you can take money in and out. So life is easy. So that's the bare minimum. I think anybody who is outside and still don't want to open a Zerodha account and ICCI account or reactivate it, that much they can surely start so that they don't, get the feeling of missing the bus given all the hype of India doing so well. That option is always there. And then entire NRE, NRO account, direct investing option is always there. So, I mean, we understand a lot of those challenges, but the another thing, Varun, which we often discuss, right? I mean, at least one thing personally, I feel that most of these first generation people who have moved out struggle in global markets is while they might have the intelligence or research capability to evaluate local equity options, they will never have the know-how of those market nuances as compared to what they will know about India. Because you are grown up in India in 90s and 2000s and you understand who is Mukesh Ambani, who is Adani, who is this group, what are the corporate governance standards. Those kind of understanding, no matter how many years you have spent in Texas, Florida, you'll never get that local understanding, right? So that is why unless you are a hardcore, professional working full time in funds and research, then probably it's a different thing. But for more like an individual investor who can spend 5 hours a week max, it becomes very tough to get that direct equity edge, right? And most people get that dopamine from direct equity, right? So people are not only driven by returns, they are also driven by the joy of investing. And that's where you see a lot of people living outside, taking pains, time zone pains, these market challenges, I'll say structural barriers pains, and still they want to do direct equity because they feel that they can do better in Indian markets compared to they can do in international markets. So that is one thing I wanted to add, Varun, here.
नहीं बिल्कुल दिस इज अ वेरी गुड पॉइंट संदीप सो जनरली जैसे हम लोग एकेडमिकली सोचते हैं वी थिंक अबाउट ओके व्हाट शुड बी द रिटर्न ऑफ इन अ कंट्री वी स्टार्ट द बेस लाइन वी स्टार्ट इन यूएस is that US the equity risk premium in US is around 6%. Now we start adding things on top of that. We say, okay, 6% in US, I should get at least 2, 3%, 4% more if I'm investing in a foreign country. So you add that as a risk premium. Now, if you are an Indian, and a slightly controversial topic in terms from academic perspective, but if you are from India, sitting in US, should you add that 4% equity risk premium that is added for part of that is not knowing about that foreign country, not having an understanding of the country. But if you're an Indian sitting in US, you have that. So that 2% that you are getting on top of uh, uh, out of 4%, let's say Indian risk premium, 2% is for that unknownness, and that as an Indian you're getting it kind of free. So I'm totally with you that first generation Indian sitting in US, for that person, India is not same as let's say China or Mexico, because both all these countries are emerging market countries. For the argument's sake, let's say they have equally good legal and political stability. So the risk premium on all these three countries should be the same. But for an Indian, possibly it should not be as high as it's for a US, for a Mexican about India and an Indian about Mexican market. So I'm totally with you that knowledge of the local market uh, gets compensated, and that comes handy.
Fantastic, Varun. Actually, thanks for highlighting that part that we this there is in this uh, known unknowns kind of a risk inbuilt into country risk premium part, right? It's just not the macro indicators; it is also the lack of comfort or lack of familiarity. We always pay more for pay better multiples for things which we understand. So glad that you brought it. Varun, just to keep the pace going and keep it short this entire session.
Sandeep,
Uh, yes, sir.
I had a question.
Yes, Nikhil, please.
So I had just a, contrarian thought to what you just mentioned, which is like when you are an NRI or you are in the outside the country, while you, might not understand that particular country as well as you understand India because you are born and brought up here. But my point is about also choices, right? That the kind of choices, say, a US or a Western market might offer, maybe in terms of technology stocks, maybe some of the other, companies that the Indian market might not offer you, and wouldn't that attract you more? That okay, I'm getting some of the most emerging new companies, most innovative new companies which are coming there, whereas India might be still, a little bit more of the legacy companies. And I'm not talking about what is happening in the micro cap and SME space today, but largely that's what the structure of the Indian market has been. So will that also be a consideration if I'm thinking about expanding my horizons as somebody living outside India?
Fantastic. Varun, if you're okay, I'll take it given, my level of involvements in markets. And Nikhil, I understand. So one thing I wish to highlight when Varun was highlighting, it was more comparing with emerging market baskets and where you are going, which is where a lot of Indians living in India is very attracted, is the tech exposure, US tech exposure, right? Nasdaq and those sort of companies, which is like in nowhere. No, it's not even in Europe or China, right? Forget about emerging markets. So for that exposure, obviously everyone is very attracted. In fact, if you do a sample sense check, most of these NRIs living in Europe, US, because majority of them are working in tech industries, they get this exposure, they understand that industry much better. They're very heavily invested not only in FANG but even in smaller cyber security firms, this cloud, that cloud. So they're already fairly loaded. In fact, people back in India also want to have that exposure, and that's where the RBI restriction is coming into the picture, because they've allowed some of the mutual funds to launch these schemes, but every 6 months they just stop it because they already have two big buckets of foreign money going out from India, like secular style. In fact, three, I'll say: the gold imports, the education, and then the travel. And they don't want to open the fourth one, which is the global exposure. People sitting in India starts buying European stocks or American stocks, kind of a thing. So from that perspective, Nikhil, I mean, absolutely no dispute. Country comfort is not the only factor. The kind of exposure you can get in US tech market is just not available anywhere else, including India. So fully taken on that point. We were talking about more from a perspective of someone who is already, let's say, 60-70% is in US equities, because mind you, a lot of these people have good 401k plans also, right? Which is already very heavily invested in equities, provided you had taken that choice. So they surely want to diversify, and someone like an RIS OCI based out of US, which has made 5 million, 10 million kind of a dollars. When it comes to diversification, India becomes an obvious choice. So historically, they didn't take that route purely because they thought, I mean, in spite of all the hype, India delivered what, a mid-teens kind of a thing at a Nifty level, adjusted for depreciation, that is still 9-10, and that's what US market actually gave last 10 years. So even though the expected return in US will be what, 6 and 7, but markets have been fantastic purely because of this tech element, where the tech at S&P level is right now roughly 25, 30, in fact 40%, if not, I'm not wrong, right? That used to be 5-10. So that outperformance ensured even a big market like US did literally like 10-12% kind of an USD return. So an NRI had absolutely zero reason to be in India, right? But that factor is dramatically changing. It is changing in front of our eyes. A lot of people are able to understand those levers, that it is not one related to cyclical up and down valuation, but more of an structural change. A lot of macro factors, which is what Varun explained, and then some of so what we are discussing right now is like top-down factors, right? And Nikhil, you and I, we often discuss a lot of bottom-up factors, name specific things. So Nikhil, I hope kind of
Yeah,
partially or
yeah, yeah.
somewhat on.
Totally makes sense. And just one rejoinder to that, I'm thinking, since some of you also live abroad, so is there a, given the positivity, given the kind of positioning India's had in the last 10 years or so, is there also a sort of a FOMO for those who are working or living outside, that, we should not miss out the opportunities in India? And that's why, obviously financial markets are also offering that participation. So maybe that's also the reason that I think we'll see more growth from people living outside investing in the Indian markets.
I mean, whether you call it FOMO or JOMO, it's a function of what is likely to happen in future, right? So some people
Right,
were
right,
missing
right.
it on purpose, right? Joy of missing out. But you're right, right? We all are now connected in WhatsApp group. We are talking to, people, friends, family back in home, and everyone is talking about the stock market. So you're forced to take more notice, right? And then international media is slowly, a lot of these international media, I'm not talking about the liberal non-financial media, but the financial media. So India coverage is slowly increasing. You can see, Indian CEOs becoming what I call, I mean, let me divert a little bit. So we were workers, then we became CEOs, and now we are becoming owners in US companies, right? So India is all over the place. So an NRI who has left India back in like 10 years back, 20 years back, is still listening, let's say Kumar Sanu of the world. Suddenly he can't afford to ignore India anymore. So whether it is FOMO or just a lot of noise, they're forced to take notice, I'll say.
That makes sense. Thanks, Sandeep.
And Sandeep, just to and Nikhil, just to add, like, it's investing. It's not about or. It's about and. Uh, uh, you don't choose between this or that. It's always better to add both, unless until two assets are perfectly correlated. Having some exposure in both the assets, having as much diversified portfolio as possible, always reduces your risk and increases your Sharpe ratio. So it's not about whether we should invest in tech in US or in India. We should do both of them. That's the, as a passive investor with a well diversified portfolio. If that's the approach, that should be the case. Unless until you are getting into active investment and uh, getting very focused and more uh, concentrated portfolio.
Great. So,
Totally.
yeah.
Thank you.
So Manoj, you can quickly unmute and ask your question if any. Then we move on to next section. Yeah. Yeah, Manoj.
हेलो हाय प्रिंस जी इन सभी को
Hi.
नमस्ते
Please.
जितने स्पीकर हैं प्रिंस
Yeah.
जी आपने काफी अच्छा काम कर रहे हैं आपके इतना हार्ड वर्क को रियली अप्रिशिएट करते हैं अभी 3 घंटे का वो करने के बाद अभी डायरेक्टली फिर से कर रहे हैं आप और काफी रिटेल इन्वेस्टर को काफी अच्छी जानकारी मिलती है जिन लोगों को मतलब हमारे पास जैसे एक्स्ट्रा सोर्सेज नहीं होते हैं नॉलेज के और इतने अच्छे अच्छे स्पीकर्स को बुला के आप इतना अच्छा अच्छा मतलब चीजें पे कंसल्ट करते हैं, टॉक करते हैं, तो काफी कुछ सीखने को मिलता है। सो थैंक टू यू।
Thanks, Manoj. Manoj, any question on your part?
नहीं सर, अभी फिलहाल तो कोई क्वेश्चन नहीं
Yeah,
है।
thank you so much. Thank you so much. So Varun, coming to the next question. So, what are the challenges in Indian real estate as an asset class for the diaspora? If you would like to highlight a few.
प्रिंस, मेरे हिसाब से जो बिगेस्ट चैलेंज इज मेंटेनेंस एंड मैनेजमेंट. वी डोंट हैव रेट्स, ज्यादा नहीं है, तो एक इलिक्विड एसेट क्लास है, उसको मैनेज करना थोड़ा सा मुश्किल होता है. मैं पर्सनल अपने एक्सपीरियंस से बताता हूँ. कुछ फ्लैट्स लिए थे, वो काफी टाइम से मिले नहीं, मिल गए तो उसके बाद अब उसका रेंट पे चढ़ाना, उसका मेंटेनेंस करना, दे आर ऑल हैसल्स. प्लस अगर खुदा ना खास्ता आपको किसी उसमें लिटिगेशन में फंसना पड़ता है किसी रियल एस्टेट में, तो दैट्स इवन मोर डिफिकल्ट इफ यू आर नॉट सिटिंग इन इंडिया. सो बाहर से बैठ के एक इलिक्विड एसेट क्लास जिसकी मेंटेनेंस लगती है, वो मुश्किल होता है. ज्यादा इसका फ्लिप एग्जांपल मैं आपको देता हूँ कि लंदन में आप जाएंगे तो आप देखेंगे कि बहुत फ्लैट्स, बहुत प्रॉपर्टीज लोग हांगकांग के या मिडिल ईस्ट वाले लेके रखते हैं. और उसका रीजन ये है कि वहां पे एक बहुत अच्छा रियल एस्टेट मैनेजमेंट कंपनीज हैं. तो आपने फ्लैट खरीदा, आपको उसको रेंट पे चढ़ाने का काम, उसकी रेगुलर मेंटेनेंस आपने कंपनी को आउटसोर्स कर दी. वो कंपनी आपको एक गारंटेड रिटर्न भी देती है कि वो कहती है कि 12 महीने में से 10 महीने का मैं रेंट आपको गारंटी करती हूँ. अगर वो नहीं भी चढ़ा पाएंगे उसको रेंट पे तो अपनी जेब से देंगे. तो उसमें आपका क्या है कि एक बिल्कुल हैंड्स ऑफ अप्रोच है. आपका फ्लैट कहीं पे है, आप कभी देखने भी नहीं गए, पर उससे आपको रिटर्न्स आए जा रहे हैं. पर उस तरीके की कंपनीज मैंने इंडिया में नहीं देखी हैं. तो एक फ्लैट का मेंटेनेंस खुद ही करना पड़ता है. तो जैसे मेरे केस में अपने पेरेंट्स को बोलना पड़ता है, तो वो थोड़ा सा हैसल रह जाता है. और तो यही मेरे हिसाब से रियल एस्टेट के थोड़े शॉर्टकमिंग्स हैं एज एन एनआरआई. बाकी जो रियल एस्टेट के अपने जनरल इश्यूज हैं वो तो है ही हैं, बट एज एन एनआरआई उसका मेंटेनेंस मेरे को काफी वो करता है, ट्रबलसम लगता है.
So Varun, to add, when you sell your 20% withholding, right? Plus the transaction cost has gone up dramatically. So you have a stamp duty, you have brokerages, you have builders taking cuts every time you try to sell. So it has become quite a mess. I'll say people have killed the golden goose. 10 years back, every NRI who had an emotional card also. A lot of these investment driven decisions are not purely driven by, monetary angles also, right? So people invest in India because they want to have that give parents that comfort, right? We understand how much real estate matters to our previous generation. So a lot of NRIs were doing because they were doing well and they thought their parents will be happier and let's do investing, and now they regret those decisions. I see a lot of those people are struggling to maintain, sell those properties. So that's why you will see the trend of people NRIs earning abroad and remitting in India and buying this real estate has dramatically come down in last 10-15 years. In fact, I know a lot of people in my plus one, plus two circle who are actually selling those properties, in some cases even ancestral properties, and taking money back, kind of a thing, or maybe putting in Indian markets rather than real estate. So that for sure is a very strong trend, which people can anecdotally also confirm also.
नहीं, बिल्कुल संदीप, मैं तो खुद पर्सनली अपना रियल एस्टेट एक्सपोजर कम कर रहा हूँ इंडिया से, इसी वजह से. और उसमें ये रहता है कि जैसे आप सही बोला कि पेरेंट्स हैं, एक इमोशनल कनेक्ट होता है, आप इंडिया जाते रहते हैं, बट ओवर टाइम फिर आपकी फैमिली और टाइम आपका मोर एंड मोर यूएस में बीतने लगता है या यूरोप में बीतने लगता है, जहां भी आप रह रहे हैं, तो वो इंडिया में मेंटेन करना और मुश्किल हो जाता है. और मैंने कितने लोग देखे हैं जो कि फाइनली देवर लाइक कि हाँ यार वो इंडिया की प्रॉपर्टी है, उसको कुछ करना है, तो आए जल्दीबाजी में उसको बेचा, उसकी वैल्यू भी सही से नहीं मिली. उसके बाद वो नोएडा अथॉरिटी गए, नोएडा अथॉरिटी में जैसे ही वो देखते हैं कि आप एनआरआई हो, उनके नाटक और ज्यादा बढ़ जाते हैं. तो उसके बाद वो जल्दी उनको एक हफ्ते के टाइम में प्रॉपर्टी बेच के उसकी रजिस्ट्री करा के उसको हैंड ऑफ करके जाना था, तो उन्होंने सस्ते में बेचा और उसके बाद चले गए. तो वो काफी प्रॉब्लमेटिक हो जाता है. प्रॉपर्टी बेचना अपने आप में महीनों का काम हो जाता है, फ्रॉम द स्टार्ट ऑफ द प्रोसेस टू पहले नोएडा अथॉरिटी, फिर रजिस्ट्री, फिर ये, फिर वो, तो वो भी प्रॉब्लमेटिक होता है.
Fantastic.
So we got one more speaker. So Raksha, you can unmute and ask your question.
Hi, thanks. Quite interesting thoughts being shared. How do you, and Varun sir, thanks for sharing your thoughts. You got a very broad horizon in terms of the knowledge and the macroeconomic conditions. How do you see gold as an asset class in this backdrop?
Gold as an asset class, it's a good hedge for inflation. It has always been a good hedge for inflation. As an Indians, we generally are over invested in gold. I won't say ki gold, we should not invest in gold, but just because of our ancestral uh, heritage, wealth, uh, fascination for jewelry, we are always over invested in gold. So my take is, unless until anybody is different, particularly as Indians, we should try to reduce our exposure to gold. Its value is driven by what we value it for. It has no intrinsic usage, industrial usage, as in it's just a great hedge. It has proven worthy of its name, largely because of demand coming from India. It has given great returns, no doubt about it. But does it serve any purpose? Maybe, maybe not. किसी जमाने
Yeah.
में it used to be a fungible asset. Value of gold can you can carry it easily, you can transport it easily. Value of gold is universally accepted everywhere. So it had that element of safety attached to it. But in today's world, when a stock price can be checked instantaneously, can be sold instantaneously, do we really need gold as a safe asset? Uh,
Mm,
you could carry it in your pocket and ran away if things went bad. That was the idea of gold. Now, do we don't need to we
mm,
don't need to carry assets in our pockets. They are digitized, they are safe, they are secure. So, personally, I think Indians are overexposed to gold and over invested in gold.
That's a fair point, and I think there are quite a few parameters, right? There is sentiment, and then it's keep it for the rainy days. But how much do you keep for the rainy days is also a question mark when you're actually incurring costs to actually have something as an hedging instrument rather than versus something else which is, as you rightly pointed out, which is more digitized and more easy to access and leverage.
Yeah, indeed. So keep it for a rainy day. Stocks can be kept for a rainy day. If you're thinking about hedge again as a diversification tool, totally, I'm with you. You should have exposure to gold. Uh, Lately, there has been a lot of investment in gold as an asset instead of buying the physical gold.
Mm,
So that has taken up. That's I find much more better way of investing in gold than buying physical gold. There's always some amount of wastage and slippage when you buy
yeah.
physical gold and you sell it.
Thank you.
Sandeep, do you have anything on your part to add, or maybe Nikhil, Deepak?
No, I mean, gold is a very big topic, so just in interest of time, maybe we can move on to other sections, Prince, so that we keep it short, etc. Because gold in itself can be 2 hours session, and still, I mean, you will end up discussing in from various direction, and depending upon what's your motive, you'll have always divergent views also. I mean, it is
True.
right now popular because world is becoming multipolar after good 25 years. So it has become extra attractive, right? De-dollarization, what we say. Now, whether that is a permanent or etc., is a matter of debate because if Trump comes in, he may force his way back, and all these geopolitical dimensions can overnight change also, right? So, I mean, this
Mm,
is such a big topic that it is very easy to have opinion, but is that opinion a wisdom? I'm not so
yeah.
sure, so I'll purely skip.
Makes sense.
So, so Sandeep, we take quick question from Amit and then we move on to next section. Yeah, Amit.
No, I think the next question what I have, what Raksha asked is silver as a hedge fund. Because why I want to bring up this point, because after treasury bonds, which is the tier one asset which has been part of the world reserve currency, that's gold. And after before 1980s, it has been suppressed by the whom? We know whom. So So that's, I think, I feel gold and silver, that is why what Sandeep Bhai told is correct. But I feel still it has been very suppressed. But whatever we are holding now, it's more valuable because 1 ohms of gold can go to 48,000. That is my prediction. And silver, more than 1,000. That's where we
Thank,
sit. But
thanks,
my
Varun.
question is, how can we actually look at silver? That's my question. Thank you.
See, I am not gonna
So, Varun,
again, as I said, it's you should try to diversify as much as possible, and from that perspective, uh, gold and silver both acts as a good inflation hedge. They are safe assets. Their price increases when there is some geopolitical events are there, when there is any uncertainty is there, when there is any volatility is there. So they are a good hedge. I won't speculate on what the prices of gold would be or silver would be. I'm not in the position to do that. For that, you need a lot more analysis to do that.
Okay. So, Prince, just to move on, Deepak, one particular aspect maybe we can briefly talk about, and then we are pretty much done. Instead of overanalyzing the topic, is this capital control, right? Which you were earlier referring. So, if you wish to, highlight this LRS scheme and what are the pros and cons, how easy tough it is, because that has been a major decision making for a lot of these global Indians trying to look at India as an option, because they want money back at will, right? For medical purposes, for any sudden real estate decisions they take in their life, or for kids' education, etc. So the biggest challenge they face is easy to bring money in, but it is tough even for Indians to take money out at volume. So Deepak, over to you for
Yeah,
LRS scheme.
sure. So, just for everyone's knowledge, LRS stands for Liberalized Remittance Scheme. That was started in India, I think, somewhere in mid 90s probably. And the idea was to allow people some freedom to invest some money overseas. As I was mentioning earlier, कि capital account पे basically when we are purchasing goods or services, we can make payments in foreign currency easily. But जो कि current account होता है, तो current account पे rupees being fully convertible. Basically, you can remit dollars as we have been remitting, whether we're buying for defense or for oil or for any other, food, etc. anything. बट कैपिटल अकाउंट में जब हमें बाहर कोई प्रॉपर्टी खरीदनी है, शेयर्स खरीदने हैं, तो उसके लिए कंट्रोल है, लाइक, एंड दैट कंट्रोल इज फॉर इंडियंस एंड देन नॉन रेजिडेंट इंडियंस. जो फॉरेनर्स यहाँ पर पैसा आके इन्वेस्ट करते हैं, वो तो एफडीआई रूल से आता है, और वो उसके नॉर्म्स अलग हैं टू टेक द मनी आउट. दे हैव टू पे टैक्सेस एंड ऑल दोस थिंग्स, whether it is capital reduction or dividend distribution tax. But yes, as Sandeep you mentioned, people say a lot of our investors are NRIs who if have invested from the money which they have earned in India, and tomorrow they need that money in US, either for say or any other country for their kids' education or for buying a property overseas, then there is a limit to the quantum of money that each individual can take on an annualized basis. That limit right now stands at $250,000. So roughly 2 crore rupees, 2 crore rupees per annum is something which NRIs or Indians, even we from here, can remit outside India, specifically for the purpose of either buying a property or for share purchase, etc. All our other, remittances, be it around, say, medical expenses, or if you want to gift to some relatives or travel, everything actually gets clubbed into one. This has happened recently, over the last few years, where government realized कि यार अलग-अलग लिमिट रखने की अच्छा सब कुछ मिला के एक ही लिमिट कर देते हैं. So basically what it means is कि आप US ट्रिप पे गए, आपने मान लो just assume आपने $50,000 कंज्यूम कर लिया एज अ फैमिली, एंड यू हैड डन इट ओनली ऑन योर पैन ऑन वन पैन ऑफ योर्स, तो आपका $50,000 लिमिट यूटिलाइज हो गया इस फाइनेंशियल ईयर के लिए, और आपका बाकी $200,000 बचा है, जिसको आप बाहर बैंक अकाउंट भी ओपन कर सकते हैं, उसमें भी रख सकते हैं. तो ये लिमिट 2013 में काफी न्यूज में थी, जब वो टेपर टेंडर हुआ था, तो उस टाइम पे लिमिट को एकदम कम कर दिया गया था. 250,000 को 125,000 भी कर दिया गया था, क्योंकि उस टाइम काफी ज्यादा जब ट्रेजरी वाला इशू हुआ था, जिसमें कि करेंसी भी बहुत इंडिया की ड्रॉप हुई थी. बट फ्रॉम देयर आई थिंक वी हैव कम वेरी लॉन्ग फार इन अ वे दैट आज की डेट में जो हमारे रिजर्व्स हैं, दे आर मच हेल्दियर. तो अभी कुछ ऐसी एंटिसिपेशन नहीं है इस तरह के कंट्रोल की. बट नेवर से नेवर वाली बात है कि कभी कुछ वॉर या उस टाइप की कुछ सिचुएशन होती है, और अगर देश को जरूरत है तो ऐसा हो सकता है कि इस पर फिर रिस्ट्रिक्शन लगाई जाए. that's where it stands today. Hopefully things will keep on improving only from here. अभी भी ये जो $250,000 है ये पर पैन है, तो अगर आप फैमिली में 2 पैन है हस्बैंड वाइफ, तो आप 500,000 एवरी ईयर कर सकते हो. और काफी लोग इसलिए जब बाहर पैसा लेके जाना होता है उनको इंडिया वाला, तो वो धीरे धीरे लेके जाते हैं, जिससे कि वो अगर कुछ बड़ा परचेज करना चाहते हैं इंडिया के बाहर तो वो कर सकते हैं. That's how people have been doing. It's very common. I think most of the rich people do anyways do it, and that's how they get their money to buy their $1 million mansions overseas. So that's where it stands. That's my limited awareness and things about the piece. Happy to take on any questions, comments. I think from today's topic perspective, at least, I think for a retail investor काफी लिमिट है. अगर आप 2 लोग भी हैं तो आप 4 करोड़ रुपए के आसपास तो एवरी ईयर लेके जा सकते हैं. रिटेल इन्वेस्टर के लिए इट्स a sizable amount, so it should not worry investors as so much if their money is here and tomorrow they need that money outside. Likewise,
Yeah.
इस पे एक और पॉइंट भी है जो निखिल was mentioning about investing overseas. We can also, as resident Indians, we can use this window to invest overseas also if we want. So that if anybody has any kind of FOMO or they want to invest, government allows you to invest. And if you follow Professor Sharma's philosophy of investing this and the other one, then we can start doing with a small investment for now, and then at the right opportunity, at the right timing, we can increase that as well. That opportunity also exists for all of us.
Fantastic, Deepak. So, Prince, I think.
Yeah,
Sorry.
one more speaker. So meet Gaurav, right? So yeah, you can go ahead. Gaurav, you can go ahead. You're still on mute. Anyways, some issue. So Sandeep, why can't we ask Varunji for sharing his research with our audience? That would be very valuable. I mean, he had put so much of hard work in that, so it would be great if.
No, thanks, Prince. I mean, even though I understand it might be a bit of deviation, and I'm not sure how comfortable Varun is, but at least a lot of people a lot of us who know Varun, and we always love to bother him about some of the research work he has done, which actually I posted his link here on the chat, and people can go and see he has co-authored quite a bit of work. So Varun, just to probably, I mean, please don't mind also this request. It's a deviation, but I mean, we should probably also see the quality of research is being done by fellow Indians, or at least someone we know personally, some of us. So Varun, any specific research paper if you want to share, that will be really great on your part to do that.
No, sure, Sandeep. Thanks. It's an honor to talk about my research in presence of so many learned people like you. So let me talk about एक नया पेपर है अभी कुछ महीने पहले ही हमने इसको खत्म किया है. काफी इसको कवरेज मिल रहा है मीडिया में. हमने इसका एफटी ने भी कवर किया था, हमने ब्लूमबर्ग पे भी इंटरव्यू दिया था इसके बारे में. सो बेसिक आइडिया इज कि बिजनेस साइकिल में फ्लक्चुएशन क्यों आते हैं. Why does business cycle fluctuates? Why is GDP sometimes better, sometimes bad? Or it's an age-old question. It's as old as a economics field is. That's how old this question and fundamental this question is. And इसके दो एक hypothesis रहते हैं that business cycle fluctuates because of shocks to fundamentals, and second is they fluctuate because shocks to sentiments. So by fundamental I mean something like कि सब prices आ गया, आपका कोविड आ गया जिसकी वजह से जीडीपी टैंक हो गई, कई बार एक आपको अपशॉट मिल गया तो जिससे जीडीपी अच्छा बढ़ गया, सडनली कुछ बड़ा इवेंट हुआ. बट इसका एक सेकंड पार्ट है, वो है सेंटिमेंट्स का, कि क्या सेंटिमेंट से ड्रिवन होते हैं, कि आप देयर इज लॉट ऑफ पॉजिटिव बुलिश सेंटिमेंट्स. जो बुल और बियर वाला हम स्टॉक मार्केट के बारे में सोचते हैं, वो वैसा एक इकोनॉमी के बारे में भी हो सकता है कि जो कॉर्पोरेशंस हैं वो बहुत बुलिश हैं अबाउट फ्यूचर एंड दे स्टार्ट इन्वेस्टिंग, or they are bearish and they stop investing, and as a result आगे चल के वो ओवर इन्वेस्टमेंट होता है जिसके बाद वो इकोनॉमी स्लो हो जाती है बिकॉज देयर इज ओवर कैपेसिटी. अंडर इन्वेस्टमेंट होता है तो फिर उसकी वजह से इन्फ्लेशन बढ़ता है और उसकी वजह से जीडीपी स्टार्ट्स ग्रोइंग फास्ट. सो इस रिसर्च को हमने आगे बढ़ाया है. इसमें हमने रोल ऑफ सेंटिमेंट का फोकस किया है. प्रॉब्लम विद अंडरस्टैंडिंग रोल ऑफ सेंटिमेंट इज कि सेंटिमेंट हम मेजर कैसे करोगे। अगर आपको ये समझना है कि सेंटिमेंट का अफेक्ट जीडीपी पे या बिजनेस साइकिल पे, तो सबसे पहले मेजर करना पड़ेगा। तो जीडीपी सेंटिमेंट मेजर होता है अभी तक सर्वेज से, और सर्वेज बहुत ज्यादा साल पुराने नहीं है, कुछ 10 20 30 साल पुराने तक जाते हैं। और सर्वेज में आप कुछ लोगों से पूछ लेते हो कि भाई आपको क्या लगता है फ्यूचर इकोनॉमी कैसी होगी, तो वो ज्यादा आइटम कवर नहीं करते हैं, और वो एक नेशनल लेवल पे होते हैं। तो हमको हमारे पास एक 40 साल पुरानी सीरीज है जो एक सर्वे के थ्रू सेंटिमेंट मेजर करती है। तो हमने इसको बेटर करने की कोशिश करी कि हम इसको बेटर कर सकते हैं क्या। तो पहला सवाल था कि सेंटिमेंट हम क्या बेटर मेजर कर सकते हैं। तो एक तरीका सर्वे को सेंटिमेंट मेजर करने का है न्यूज़पेपर्स से। न्यूज़पेपर्स पिछले 200 साल से पब्लिश हो रहे हैं। वो बड़े लेवल नेशनल लेवल पे होते हैं, वॉल स्ट्रीट जर्नल है, न्यूयॉर्क टाइम्स है, बट उसके साथ साथ वो एक लोकल लेवल पे भी पब्लिश होते हैं। तो शिकागो टर्मिनल हो गया, या फिर इंडियानापोलिस टाइम्स हो गया, या फिर एटलांटा न्यूज़पेपर हो गया। तो ये छोटे छोटे शहरों में, बड़े यूएस के मेट्रोपॉलिटन्स में पब्लिश होते हैं। तो हमने क्या करा, हमने 200 साल के जितने भी मतलब जितने बड़ा हम ले सकते थे उतना बड़ा हमने एक पूल ऑफ न्यूज़पेपर्स लिया, लोकल न्यूज़पेपर्स लिया, और उसको हमने सारा डाउनलोड किया, पहले स्क्रैप किया वेब से। तो उससे हमारे पास सारा टेक्स्ट आ गया कि न्यूज़पेपर्स में न्यूज़पेपर्स का। अब न्यूज़पेपर्स ये कॉर्पस हमारा एंटायर जितना इंग्लिश विकिपीडिया है उससे 100 गुना बड़ा है। तो यू कैन सी कि स्केल कितना बड़ा है इसका। अब ये टेक्स्ट तो हमारे पास आ गया, बहुत बड़ा टेक्स्ट है। अब इसको सिंथेसाइज कैसे करें। तो इसमें हमने न्यूरल नेटवर्क बेस्ड मशीन लर्निंग टेक्निक्स लगाई, वर्ड टू वेक, सेंट प्रॉफ, कुछ टेक्निक्स हैं जो कि आप की इंफॉर्मेशन को सिंथेसाइज करती हैं। तो मैं उनकी डिटेल में नहीं जाऊंगा, बट इसको हमने करके एक 200 साल का नेशनल स्टेट काउंटी लेवल का इकोनॉमिक सेंटीमेंट का मेजर बनाया है। तो अब इससे हम एक सेंटीमेंट मेजर कर सकते हैं कि लोकल लेवल पे सेंटीमेंट इकोनॉमी को लेके पॉजिटिव था या नेगेटिव था। हमने नॉन इकोनॉमिक सेंटीमेंट भी देखा, बट जो इकोनॉमिक सेंटीमेंट निकल के आया उससे हमने पाया कि वो जीडीपी पे इफेक्ट डालता है, लोकल लेवल पे भी और नेशनल लेवल पे भी, स्टेट लेवल पे भी डालता है। इवन आफ्टर हमने नेशनल लेवल सेंटीमेंट और नेशनल लेवल जीडीपी ग्रोथ को कैप्चर करा हुआ है। फिर हमने चेक करना शुरू किया कि ये जीडीपी पे इफेक्ट क्यों डालता है, किस रीजन से डालता है। तो हमने पाया कि ये इन्वेस्टमेंट प्रिडिक्ट नहीं करता। तो ये कॉर्पोरेशंस का इन्वेस्टमेंट नहीं प्रिडिक्ट करता, बट ये लोगों का कंजम्पशन प्रिडिक्ट करता है, और कंजम्पशन में भी नॉन ड्यूरेबल्स प्रिडिक्ट करता है। तो बेसिकली आप, और एम्प्लॉयमेंट प्रिडिक्ट करता है। तो अगर सेंटिमेंट बढ़ता है तो लोग ज्यादा सामान खरीदते हैं। जो सामान खरीदते हैं वो गाड़ियां और घर की बात नहीं खरीदते, जो कि बड़ा इन्वेस्टमेंट होता है। वो रेगुलर सामान ज्यादा खरीदते हैं, ड्यूरेबल जिसे कहते हैं। ज्यादा मतलब इन टू पुट इन सिंपलर वर्ड, वो ज्यादा वेकेशन पे जाते हैं, ज्यादा बाहर खाना खाते हैं, सर्विसेज में ज्यादा उनका यूसेज होता है। उसकी वजह से एम्प्लॉयमेंट बढ़ता है। तो इस तरीके से सेंटिमेंट अगर पॉजिटिव होता है तो वो एक लोकल इकोनॉमी को स्पर देता है, लोकल इकोनॉमी को एक पुश देता है। सेंटिमेंट खराब होता है तो लोकल इकोनॉमी को नेगेटिवली अफेक्ट करता है। तो इसका एक अच्छा एग्जाम्पल, एनेक्डोटल एग्जाम्पल है कि अभी कुछ दिन पहले वो टेलर स्विफ्ट के वो चल रहे थे, शोज चल रहे थे। तो फेड ने एक वो अनाउंसमेंट दिया था कि इन्फ्लेशन थोड़ा सा ज्यादा आया था बिकॉज ऑफ दो शोज, बिकॉज उन शोज की वजह से सडनली डिमांड बढ़ गई थी। तो ये उसका एक बहुत ही डिटेल्ड और एनालिटिकली डन एनालिसिस है जो दिखाता है कि हाँ, हमारे पेपर से हम और इसका मेन टेक अवे ये है कि जनरली माना जाता है कि सेंटिमेंट इन्वेस्टमेंट के थ्रू अफेक्ट करते हैं, कि अगर सेंटिमेंट ज्यादा होते हैं तो फर्म ज्यादा इन्वेस्ट करती हैं, और वो फिर बाद में ओवर कैपेसिटी की वजह से जीडीपी बाद में वो एक्सेस कैपेसिटी रहती है और वो एक जीडीपी में स्लो डाउन होता है। तो हमारा एक नया एंगल हम दे रहे हैं कि सेंटिमेंट शायद जीडीपी को, बिजनेस साइकिल को अफेक्ट कर सकते हैं बाय कंज्यूमर कंजम्पशन एंड नॉट इन्वेस्टमेंट। हमने पाया है कि हमारा इन्वेस्टमेंट प्रिडिक्ट नहीं होता है हमारे मेजर से। तो इट कैन बी अ सेल्फ फुलफिलिंग प्रोफेसी। आपको लगता है कि जीडीपी अच्छा करेगी, इकोनॉमी अच्छा करेगी, मेरी तनख्वाह बढ़ेगी, तो आप जाके ज्यादा खर्चा करते हो। वो खर्चा करते हो, वापस इकोनॉमी में फीड होता है, जिसकी वजह से लोकल इकोनॉमिक एक्टिविटी भी बढ़ती है, आपका घर का प्राइस भी बढ़ता है। तो इट कैन बी अ सेल्फ फुलफिलिंग प्रोफेसी। इट कैन बी एक्सूबरेंस, इट कैन बी इरेशनल, इट कैन बी रैशनल, उसके बारे में हम नहीं बात कर पाते हैं, कह नहीं पाते हैं कुछ पेपर में. तो इट कैन बी बोथ द एक्सप्लेनेशंस. बट ये एक छोटा पेपर, ये एक पेपर है मेरा. इसके अलावा कई और पेपर्स हैं, कभी आगे बात होगी तो बताऊंगा उनके बारे में.
Thanks, Varun. What is the size of the data you referred? You like said 100 times English Wikipedia. So what's in data terms which you scrapped?
दोबारा पूछिएगा, मैं आवाज मिस हो
So
रहा था.
what is the data size for this research paper when you talked about 200 years of newspaper data, right, in
तो आप
digitized form?
तो आप ये समझ लो कि जितना भी एंटायर इंग्लिश विकिपीडिया है, विकिपीडिया पे जितने भी इंग्लिश के आर्टिकल्स लिखे हुए हैं, उससे 100 गुना बड़ा है ये. इसमें हमारे पास 2 बिलियन पेजेस हैं, 150 मिलियन, इफ आई एम नॉट रॉन्ग, 150 मिलियन न्यूज़पेपर के आर्टिकल्स हैं, 24,000 न्यूज़पेपर्स हैं हमारे पास. तो इट्स ह्यूमंगस. मतलब अगर डेटा स्टोरेज की बात करोगे तो 4 टेराबाइट्स का डेटा डंप था ये. इसको प्रोसेस करने के लिए जो गूगल का वन ऑफ द बिगेस्ट सुपर कंप्यूटर्स अवेलेबल है रेंट पे, वो लेना पड़ा था हम लोगों को.
Fantastic, Varun. So, in fact, Deepak, Nikhil, and Prince, let me add on this particular research paper. What happened is Varun presented it in Chicago, and incidentally, we were back listening together also. So, Varun explained to me this paper. And what Varun didn't realize that this paper and his presentation was covered in Financial Times, and some of the journalists were talking about it. And while Varun's research paper had a some subsection somewhere, but what these journalists picked, and I also appreciated that particular aspect little more than what Varun explained about the entire research, is that news has been fundamentally very negative in last few decades, right? Because negative news बिकती है. तो इन जनरल जो न्यूज बहुत न्यूट्रल होती थी आज से लेट्स से 3 decades 4 decades बैक at global level has slowly become very negative purely because fear बिकता है, fear mongering बिकती है. In that sense, Varun's paper basically highlights that ability of this newspaper to capture the current sentiment is slowly reducing. So he has to apply an adjustment factor for this particular trend, which they've observed in recent past. So this was a funny take, or I'll say taunting take on media also, right? Because media has become very commercialized. So they try to sell. In other words, they predict depression or recession 10 times and they get it right one time as a media level, right? So, Varun, that was quite interesting, frankly. Okay, I think, Prince, we are pretty much done. Let's not overextend. If people have any questions, they can ask. Otherwise, we can wrap it up. Varun has to probably go
Yeah,
somewhere also.
Meet. So Meet is trying. Let me see if I can pull in as a speaker. So Meet, are you able to speak now? Meet, are you able to unmute yourself and speak?
Hey, hi Prince, am I audible?
Yes, go ahead, please.
Hey, hi. So I just want to add one point. I think one other speaker was saying that there's some limit for the remittance. I think
Yes.
that's not for NRI. For a NRE account, there is no limit. You can remit
Yeah.
unlimited.
That's correct. Meet, good that you mentioned it. The idea was, the money which is, because NRE, the source also has to be very specific. That is the non-resident external amount. However, there is a limit on the other piece.
Right. So
So
essentially,
these are two different limits, different criteria of earning as well.
so
Like
after
then there is
you
an NRO
move to
also.
Yeah, so after somebody moves outside India, if they remit in NRE and do investments through NRE account, then there is no limit. Even if you buy stocks from NRE account, and then when you sell the stocks, the money is credited into the NRE account, there is no limit. Your Indian earnings ex post,
Correct.
right? Ex post, after you have left, that has a limit.
Correct. Exactly.
So
That's what I made a
essentially,
caveat when
your
I said that.
foreign earnings don't have a limit, basically.
Correct. You're right, Meet. Yes. That's why I said, the money which you have here. So what happens in a lot of
In a lot of our cases is the money which is here from the time that you are working in India, that money has accumulated, or if you have got money from your family inheritance and other areas, or the money which is multiplied. Yeah, the discussion or the point, the limit, the LRS limit was more around that level. NRE is non-resident external. That is, and even the money which has come from outside that you can take outside back.
So
That is not
Deepak, there is
no
a
limit.
there is a workaround for that.
Okay.
For NRI, if the CA certificate is required that you have paid all your taxes, right? If you have that certificate, you can transfer all your assets into NRE, and there is no limit. So
Interesting.
technically for NRI there is no limit, right? For somebody who's living in India, there is a limit.
Okay. Sure. I know under approval route one can do it, but yes, thank you for mentioning about the CAPs. I'll
No,
delve deeper into it as well.
approval
Yeah.
approval route is there only for citizen, where RBI approval is required. For NRI, you just need a certificate from CA stating that you have paid all your taxes in India, and you can give that certificate to the bank or the concerned bank, and they will transfer everything to NRE.
Okay. Interesting. No, this is good. Good to thank you for mentioning. I think it could be useful to a lot of listeners here as well. Noted, Meet.
Thanks, Meet. So, Varun, Sandeep, Deepak, and other speakers as well, thanks so much for taking out time. It was a really interesting and engaging session, and it's always a pleasure hosting people who can add great value to our audience, and especially the audience which took out time late Sunday evening. So, definitely, it shows how much. They are into learning new things and learning the nuances related to the market. So thanks for setting this up, Sandeep and Varun. Sandeep, anything on concluding remarks you wish to say, and Deepak, you also.
No, thanks a lot, Prince. Thanks for inviting. It was really nice having talking to everybody here. Learned quite a few things.
Yes. Thank you, Prince. Thank you for setting it up, and thank you to all the fellow speakers and all the audience as well. Good interaction.
Yeah, yeah. Thanks.